All right, guys. So welcome. Today is the day, October 2nd. We've been waiting as the insurance committee for a long time. This event and another event, we put a lot of effort, and the committee really worked hard on this one to bring to the LA area insurance information, insurance background, insurance knowledge, insurance training, and to really understand what does it all mean, right? Not just from a basic high-level P&C level of just general liability and property, but what are all the specialty coverages that go with it as well. All right, so we'll get started here. So I'd like to first thank Wilson Elser. Ian and Dean put the facility together for us. We were looking for a place that could house approximately 50 to 60 professionals, and Wilson Elser came forward and said, we've got this beautiful conference room here in LA. You guys are more than welcome to use it, so we thank Wilson Elser for giving up their area. Thank you very much. And let me tell you, it's very challenging to find a facility for 80 people when you say the cannabis industry. Places don't like to give it up very easily. And then CanGen Insurance. CanGen Insurance is a commercial insurance provider. They are hosting the alcohol and food at the end of today's event. So they'll be part of the mixer portion. So let's get started here today. So today's event has two panels, and these two panels are going to be filled with some of your top experts. As a committee, we've always taken the approach, there's no paid play on our committee. It is, if you're an expert, we as a committee will suggest that you be on one of our panels for one of our events. And so the panels that you guys will see today, none of them sponsored the event, none of them paid to be on this panel. Each one of them were chosen by the committee to be and to represent the committee and what we speak for. The CCIA Insurance Committee is based of approximately 40 people, depending on the day. It's usually about 35 on a call. That's made up of insurance professionals, legal professionals, accountants, consultants, and even a few operators themselves. So we're not a committee of just insurance professionals, but insurance-minded people, or at least people looking at risk and how can we do better at it. On our committee, we've been very fortunate. I was really shocked when I was asked to create this committee. Some of the members on our committee is the Dean of McGeorge School of Law, Jay Moots. We have Krause & Associates, who's also on the Surplus Lines Association. But more importantly, we actually had the Department of Insurance, which is our regulator for what we do. Dave Jones and his group, Camille and Natalie, represent on our committee. So we were really excited to have a state regulation come on board onto a nonprofits committee and represent the insurance side of things and really be there to help us understand what we can do better and be a part of the conversation. So we really do appreciate Dave's office coming forward and working with us quite a bit. We do appreciate that. Thank you. The first panel we're going to be talking about today, but before I get into the panel, I'm actually going to introduce Justin here. Justin is the head of membership committee, and he's going to talk about what the CCIA is and what does it really mean, just for a couple moments.
Won't take up too much of your time. If you're not familiar with CCIA, the California Cannabis Industry Association, we're a member-based industry association, almost 500 members now. Obviously there's various ways of getting involved. We have 12 different committees, insurance and HR and intellectual property to ag and distribution and manufacturing. So if you're looking to get involved, definitely speak with me. We're excited to be having everybody here and the insurance commissioner and the insurance committee. And, we're just excited. We're celebrating our 5th year this year, which is, have you noticed the new rebranding? If you're familiar with CCIA, we've definitely gone through a lot of different growth the last year, along with the industry. So we're definitely just excited to have you guys. And
yeah, that's it. So I'm going to talk about the different panels. So the first panel we got today is going to be about the chain of distribution and indemnification. The second panel is going to be about specialty coverages. And then after that, we will have Dave Jones, Kat Packer from LA, in addition to Avis, who will have a short little speak at the very end of this. In between them, we'll have a bathroom break at the very end and then the mixer. Okay? But I want to introduce you guys to Dave Jones, our commissioner, who will be our host today. He will be the MC of the event and will kind of keep things on track. And Dave.
Thanks, Mike.
Thank you.
Thank you, Mike, for the very kind introduction. Thank you, CanGen, CCIA, and Wilson Elser for convening and hosting this wonderful event. Thanks for giving us the great view of Los Angeles and the wonderful pictures of the Dodgers on the wall as well. So I have the privilege of being California's insurance commissioner. Not everybody is aware. It's an elected state constitutional office in California. In most states, the governor appoints. Here, we decided to elect it directly. And I have the privilege of overseeing the largest insurance market in the United States, where the insurers collect about $310 billion in premium annually and have about $5.5 trillion in assets under management. And the mission I've set for the Department of Insurance, which I lead, and has 1,400 excellent professionals, two of which are here, Natalie and Camille, is a mission of insurance protection for all Californians. And that has two meanings. One is insurance protection from the standpoint of protecting consumers and businesses in their interactions with the insurance industry to make sure the insurers follow through on their promises. But also, insurance protection for all Californians means making sure we have insurance for all of California's individual, family, and business needs. And that includes the cannabis industry. When cannabis was fully legalized by the voters of California, I immediately set about to work with the insurance industry, with brokers, with agents, with leading law firms like Wilson Elser, with leading cannabis product and program developers like CanGen, in trying to make sure that we have as robust and comprehensive a market in California as we can, making cannabis insurance available to all assets of the supply chain. My goal is to make sure that anytime a customer walks into a cannabis retail facility, or anytime a worker works for a cannabis business, or anytime a seller of goods or services sells to a cannabis business, or anytime anyone buys or owns or operates a cannabis business, that there's insurance to cover all facets of the business enterprise, all facets of the supply chain. And we've had some success. One of the things we did very early on was with CCIA's help, Wilson Elser's help, Mike's help, we convened a meeting between senior insurance company underwriters and executives and leaders from the cannabis industry to try to acquaint the insurance executives with the cannabis business supply chain, its architecture, its degree of professionalism, risk management, degree of transparency, and degree of regulation. Importantly, we led some tours, I did personally, of cannabis businesses with insurance executives so they could see firsthand how the business operates, its degree of professionalism, transparency, and risk management. Held the first in the nation public hearing with the help of CCIA and again Wilson Elser and CanGen, who reportedly testified at the hearing, where we were exploring insurance coverage gaps that exist in the market as a way to try to highlight where there are opportunities for the insurance industry to come in. In all of my messaging privately and publicly to the insurance industry, I am doing everything I can to encourage them to get in this market. I think it's an important market for them. I think the upside is tremendous. I think the downside risk of federal intervention is close to zero, if not zero. I think importantly, as I pointed out in a letter to the CEOs of 1,300 companies I regulated the other month, you're probably all well aware of the published accounts of the meeting that one of the Colorado U.S. senators had with President Trump, where the Colorado senator reported that President Trump said, there's no way I'm going to allow Jeff Sessions to intervene in those states that have fully legalized cannabis. So we're doing everything we can to encourage entrance to the market. The surplus lines writers, there are about 30 or so that are writing in California. That is hugely impactful and really impressive. We're also working to try to get admitted carriers into the market as well. We had the first of those last year, Golden Bear, first in the nation admitted carrier to begin offering a general business cannabis insurance. Just recently, they refiled to expand their coverages and to lower their rates. So that proves to me that the market is beginning to develop. The insurers are getting more information about how best to rate the product. We're also seeing other entrants as well. We approved California Mutual. The other month, they're offering a product to landlords that lease properties to cannabis businesses. We've approved 3 surety bond issuers, issuing surety bonds that are necessary for certain cannabis businesses to comply with their state licensing requirements. We also, importantly, just approved the first generic cannabis program or policy forms offered by AEIS, which is the American Association of Insurance Services. This is an advisory organization and a rating organization, and they have developed cannabis policy forms and rates that can then be used, pulled off the shelf and used by other insurers to offer as a part of their program offerings. And so that was a critically important approval as well. We've also approved a Continental Heritage's product liability program, a bunch of work comp carriers, the list goes on and on and on. So we're very excited about the growth of the market. Now that doesn't mean that there aren't coverage gaps still, that there aren't challenges still, but I think it's illustrative to note, in the wake of the devastating fires in 2017, there was a cannabis crop grower who suffered damages as a result of smoke to their product. And they had insurance, and their insurer paid out about $1 million to help that particular business recover from the financial consequences of the fires and the smoke and the ash on their product. So that's exciting. And I think we're going to hear from this wonderful panel of experts, and the next panel as well, a whole host of important details about the emergence of that market, and as well as some of the more specialty lines that are emerging too. So I'm very bullish about this, I'm very excited about this. More recently I convinced the National Association of Insurance Commissioners, which is the standard setting body for insurance commissioners across the United States, to set up a cannabis insurance working group. And for my labors I was appointed the chair. I think that's a good thing. There was a little bit of hesitation from commissioners representing some parts of the country, but there was a strong majority sentiment of commissioners that this was the right thing to do. Because guess what? There's over 30 states that have legalized cannabis in some way, shape, or form. They're all contending, all the commissioners are contending with trying to make sure there's a market for insurance for various segments of the cannabis industry that are legalized in their state. And so we're going to put together a white paper as a way of trying to influence insurance regulators throughout the United States, identify what coverage is available state by state, where the coverage gaps are, what the issues are the cannabis industry is facing, what issues and challenges insurers are facing, and then some recommendations for best practices to insurance regulators with regard to what they can do to try to expand the market in their particular state. We have 14 other states that have signed up and volunteered to join us in this effort. So I'm really excited about that, and we're going to be moving very aggressively in trying to get that white paper done. This November, if you don't have anything to do and you're in San Francisco from November 15th to 18th, the National Association of Insurance Commissioners is meeting. But importantly, our Cannabis Insurance Working Group will meet on Thursday, November 15th from 3 to 4:30. We plan to use that as an opportunity to try to educate all the insurance commissioners about these issues that you're contending with and facing and in the middle of, but for many of the commissioners it's new stuff. So they'll get a chance to hear from cannabis insurance experts about the scope of coverage, where there are coverage gaps, where there need to be improvements. And then we would certainly invite you to attend that meeting. You can certainly reach out to Camille Dixon, who's here, and she can provide you with more information about that. So with that, let's get to the panel. We have three wonderful experts today. We're going to talk about the chain of distribution and indemnification. The panelists are Stephanie Bizzato, I hope I pronounced that somewhere near correctly.
Close enough.
With Cannabis Connect, thank you. Jason Horst with Horst Legal, and Nicole Arison with Wilson Elser. And I think the plan is you're each going to make a presentation, and then I've got some questions at the end. Great, well, I'm not sure who wants to start first. Draw straws?
I think I go through the chain of distribution
All right.
so that.
All right, let's do that.
There you go.
Okay, I'm going to sit, is there a chair down there? I'm going to join you down there. Okay, please join me in welcoming our panel.
Good afternoon, thank you for coming. As Commissioner Jones said, I'm Nicole Aronson and I'm an attorney at Wilson Elser in our cannabis practice group. So I guess to kick this off, I'll go through some basics on the cannabis chain of distribution and highlight some points of liability that we're seeing. Just a little bit of background, I guess, to fill everyone in on the same page. California has a two-tiered licensing scheme. Before you can get your license at the state level, you need local approval. I will probably refer to it as the locality because if you're in a city, that will reign, but if you're in an unincorporated county, the county's regulations are going to govern. Currently, as of July 1st, we are under the readopted emergency regulations pending the first of the year when the final regulations will take over. So I will, if there's any differences between them, I'll sort of highlight that, but for the most part, they're pretty consistent throughout. So there's four main points of risk that I wanted to bring up. The first being, or let me back up. So starting with the chain of distribution. At the most general level, you have cultivation, manufacturers, if it's a manufactured product, it could skip this, a distributor, laboratory testing, and then a retailer. I do note that basically in order to bring the product between operators, you need a distributor to do that. A lot of a lot of operators have multiple licenses, so a lot of times you'll see a cultivator doing their own distribution and whatnot. So, as I was saying, the first point of liability at the cultivation level is pesticides. So the California Department of Pesticide Regulation, just as with any other agricultural product, sort of governs the things that can and cannot be used in the crops. Unfortunately, because of the legal landscape in California and federally, the regulations are heightened significantly. One of the main problems is if you end up having your product tested at a laboratory and it fails, with few exceptions, your entire crop then has to go to waste. And so, you know, if you're an outdoor cultivator, you have to wait for the next season, and not to mention the fact that you might have a manufacturer in between that who's made their entire product based on your crop that's not contaminated. So one of the, I guess, we urge operators to really follow best business practices. One exception that I want to quickly mention is we did see that the California Department of Public Health, which governs manufacturing, if your product fails the initial batch, you can report it to the department, propose a remediation strategy, and then if that's approved, you can submit it for retesting. But that's basically your only out from the entire cultivation being contaminated. So the second point is labeling and branding, which is huge, you know, as products are trying to sort of jump out and establish themselves widespread. I'm sure it comes as no surprise that, you know, the regulations containing the content of the branding, the, you know, down to the font, the colors used, and, you know, varying by different product types are seriously regulated. One example is if you have an edible product, you have to have the universal cannabis symbol, which, I don't know if you're familiar, it's sort of that triangle with the cannabis leaf in it. And going even further, it's required to be black. So we've had, you know, some operators come to us and say, you know, but our packaging's black, so you can't, this isn't very distinguishable. Unfortunately, there is no out to it being black, and so we've just advised them to, you know, sort of outline the symbol in white so that it pops from the labeling. Another huge point in liability is, you know, in addition to any sort of regulatory action that you might experience, there's risk of civil liability. So in California, we have Business and Professions Code 17500, and that basically governs adulterated, misbranded products and false advertising. It's kind of our consumer protection laws. And the big risk here is, you know, certain statements that you might not think are problematic. For instance, say you want to say, oh, you know, Humboldt grown, or grown might be a little bit specific, but if you're not actually, if your product doesn't actually come from Humboldt, this is false advertising and you're risking significant liability. Similarly, you know, people like to put that their product's organic. We've seen in the dietary supplement industry that if every component of your product isn't in fact organic, you will, I don't want to say you'll most likely get sued, but you might get sued. And then, you know, kind of one of the last thing is, as we're seeing different compositions, you know, CBD having huge medicinal value, you can't write things like, you know, cures cancer. Maybe anecdotally, that is what a manufacturer believes, but that's going to run afoul of the regulations. And this is particularly problematic because under this statute, you can possibly be liable for not only injunctive relief, so you have to stop your operations, disgorgement of profits, attorney's fees and costs, and potentially, depending on the level of liability found, you might be responsible for punitive damages. So, I don't know, nothing to mess around with. Our third item is advertising. And so this one's a little bit quicker, but basically any statement that's made on your cannabis product that is intended to induce use of the product is considered an advertisement. under the regulations, and what this means is you have to be careful with any statement that's made for the same reasons that you risk running afoul of the consumer products issues. An interesting point that's sort of been imposed by the California regulations is the operator actually has the burden of establishing that the market or the target audience is composed of 71.6% or higher persons above the age of 21. I don't personally know how that's established, but as you can tell, that's very specific, and if you're below that, it's going to be a problem. Finally, and I know this hasn't been addressed a ton in other things we've seen, but it is the risk of data. So I think every regulated state right now has a seed to sale or a track and trace requirement, which basically monitors the plant from the seed to the point of sale and throughout its entire life cycle. This is intended to prevent diversion and sort of monitor taxes and other sort of issues. However, along with that comes a significant amount of data. I know that, for instance, if you're identifying the ultimate consumer, you might have a private health information from a medical marijuana consumer. You might have social security, you might not have social security number, you'd probably have a driver's license number, name, address. Every one of these items triggers a data breach notification requirement under California law, and depending on what happens federally, you could end up running afoul of HIPAA. And the problem with this is not only is it costly, it can become a significant PR issue. And I personally feel like cannabis operators are sort of sitting ducks in this area. We've at least heard of trends that basically, these would-be hackers are noticing that cannabis operators are focused on regulatory compliance and, obtaining licensure. And so that leaves no room for, shoring up their firewalls and making sure that they have best business practices in terms of paper copies. And if any of this gets out, you have to hire, I guess you most likely have to hire counsel, notify each person in the affected class, and retain the rest of your data. So I guess not to sound like total doomsday and that everyone's going to get sued, but understandably this is a major issue that operators need to consider, not only for the costs associated with defense, but also if someone's found in violation of the regulations, it could seriously jeopardize their ability to get their license renewed.
That's great. To be clear, Jason Horst, Horst Legal Counsel, to be clear for the operators in the room, as of January 1st, it's become much more likely that you guys are going to get sued. It's the downside of legalization and all the positive news reports is that plaintiffs' lawyers are out there and they've got dollar signs in their eyes because they see the B word flying around this industry like crazy. It being billions of dollars in California alone for them to potentially come and take from you. And so about half the people in this room are working hard to make sure to the extent possible you guys are covered by insurance for a lot of these suits and a lot of the risks that Nicole just talked about. But that's only one side of the equation. What I'm going to talk about is another side, which is what happens if you go through the supply chain and you've got everyone insured. There's still questions that arise about what happens when things go wrong. And the big question is who's going to pick up the tab. Under California law, you are going to potentially be liable. The product's liability is probably, if you asked any of the insurance professionals, any of the lawyers in this room, what they're most worried about, it's likely product's liability, and that's something that everyone in the supply chain is potentially on the hook for, in a single suit by a single plaintiff. And so what are some of the things that you can do to mitigate your own risk of being on the hook for products liability when when the bill comes due. And so I'm going to talk about contractual risk transfer. What is contractual risk transfer? It's exactly what it sounds like. It's working through the contracts that you enter into with your partners in the industry and even outside the industry to shift your own risk away from you and onto someone else. And the primary sort of components of that are indemnity and defense. Indemnity is the side of things where you have a bill that, you have a claim that's made and a judgment against you. Who's going to pay that judgment? If someone is obligated to indemnify you for that judgment, that means that they are going to pick up that tab. The problem is, in order to get there, you're going to need to likely have paid a lawyer to defend you in that lawsuit, and this can be 6, even 7-figure bills just to pay a lawyer to defend you on a case that you might lose, and so that's why we have a defense obligation as well. These are provisions that you can bake into your contracts to make sure that in addition to having an insurance policy, your insurance policy isn't necessarily going to be what's hit first. Mike's sitting over here. Mike's preference is that you never have a claim on your policy. One of the best ways to do that is to make sure that even when things go wrong for you, someone else is going to have to make a claim on their insurance policy before you have to make a claim on yours. So a little bit about indemnity obligations. Say you're a distributor and a court says that you owe a claimant $100,000. You may be able to turn to your manufacturer who's agreed to indemnify you and say, you've got to reimburse me for this. And if you don't have insurance, then they're going to be the ones to pick up the bill. If they do have insurance, then their insurance company is potentially going to be the ones to pay the bill. Defense, we've been over that. And I apologize, I got a little bit out of order in my outline, as you guys can tell. So, because everyone in the supply chain is going to be involved in every product's liability suit, you have to be very careful in setting up your contractual risk management so that if you're a distributor, you have a lot of leverage over the manufacturers you're dealing with. You're going to want to use that to make sure that they all agree to indemnify and defend you against potential liabilities from selling their products. If you're a manufacturer, you have the same leverage likely over the cultivators that you're working with. And you've got to do that carefully. There's certain language that you need to put in your policies to make sure, for example, if you want to be indemnified even against your own active negligence, right? So if my workers drop all of your products and completely destroy them somehow, I want to be indemnified for that because I'm doing you a favor by getting these to retailers. You have to do that in very specific language, otherwise that's going to be on you. And these again, this is an industry that right now is not at all savvy as to the types of agreements that you can enter into that will allow you to transfer some of these risks. Your insurance policies will likely be able to be cheaper if you can do this, though. And ultimately, no, Charles says no. And more than that, who here has made an insurance claim before? Nobody? What happens after the year after you make that insurance claim, if it's a large claim, what happens? Premiums go up, right. That you want to avoid that, right? In this business, we are getting taxed like crazy. Margins are not nearly what they're perceived when people are talking about the billions of dollars that you're all making. Every dime counts, and so you want to save them, and this is a process for how you do that. So, who actually is going to pay on the risk? If it's not you, I apologize. And I've just lost all my notes. Anyhow, I'm just gonna wing it. So, in addition to agreements back and forth, you know, your manufacturer doesn't likely have $100,000 sitting in the bank waiting to pay for a claim that you have, you know, that's on you, that you've transferred to them. Because of that, you want to make sure that they also have robust insurance coverage, right? Your insurance coverage is a backstop against them not being able to pay you, but you also want them to be able to get their risks covered by insurance as well. The way you do that, again, is to transfer that risk to them through insurance provisions that you bake in your contract, saying, I am going to require you to carry general liability, products coverage, property coverage, whatever is going to touch the risk that you are touching. You want to make sure that they are also covering in their policies. And in this industry, you want to get really specific, because a lot of the policies that exist out here have a number of holes. And the type of coverage that you want for your business may be a little bit different than the type of coverage that they might want for their business. The type of exclusions that they might want to include, you know, that you might want them not to include in their policy, they might not care so much about. So while there are a number of, you know, stock insurance requirement, you know, contractual insurance requirements out there that you can find probably on Google and elsewhere, in this industry you want to be very, very careful about using those, because your operation is different than the operation of your contractual partners. And it's also likely, given the level of innovation and just novelty of this industry, it's different than anything that's come before it. And the policies that you're working with are policies that have not been around nearly as long as a lot of the policies that people are insured under in other industries. And because of that, in your contracts, you need to bake in really specific requirements. And you need to bake in verification requirements, right? You don't want to simply be in a place where you're taking your contractual partner's word for the fact that they bought the policy. You want to see it, and not just a certificate of insurance, by the way. A lot of the time, people only look for certificates of insurance. For me, I want to see the physical policy. I want to see what the language is going to be, so that I know when push comes to shove, I'm actually covered on this policy. And a lot of it, you know, additional, what is called additional insured agreements. You become insured under someone else's policy. And the way that you can do that is on a form, most of which say you have coverage to the extent authorized by law. Which law, right? All of this is still federally illegal. Is that something that you're going to agree to? Are you going to want some sort of certainty around what that term means? Or are you going to want to bake in a different method for indemnifying you through what's called a manuscript endorsement? Are you going to want to craft the language by which you're added as an additional insured? And Charles is again shaking his head. That's on the liability side. I would say as well, I would just close, even on the risk of property loss. You know, one of the big types of coverage that is in short supply in this industry is what's called stock throughput, which is coverage transporting property. It's property coverage in transit. So if beyond liability to third parties, if you lose the value or lose entirely property that's in transit, that's really hard to cover when it's either cannabis product traveling from a distributor to a retailer, or money coming back the other way. And so if you're a distributor, you need to look in your contracts about what risks you want to take on when it comes to, do I want to take title of this property? And if I do take title, what impact does that have on my insurance policy? And as the person selling product to the distributor to take to a retailer, you want to look at that question as well, right? You know, what are the impacts of different scenarios on who foots the bill if this product gets lost? If the distributor doesn't own the product, it's probably the manufacturer while it's on the way to the retailer, and the retailer when it's on the way to, when the cash is on the way back to the manufacturer. So these are things to look at, and I will shut up now.
Hi everyone, I'm Stephanie Bazzuta with Cannabis Connect Insurance, and I am going to be talking about white labeling and brand partnerships. So I'll give the example. I've come across quite a few of them. So let's say you're a brand, you are excellent at PR, marketing, advertising. You don't actually create the product, but you thrive in this area of, okay, well, you know how to promote and market and get people excited about stuff. So what you would typically want to do is partner with a licensed manufacturer. And with that relationship though, what I'm noticing is if you are a brand that is partnered with a licensed manufacturer, and let's say this brand never touches anything related to cannabis, right? They are literally just at trade shows, they'll have empty containers, they'll get you pumped up about a product, and they'll do trade shows all throughout California. But they're having a really difficult time right now getting insurance because the insurance carriers are looking at it as if they're still directly in the cannabis space, even though they're kind of ancillary. You can consider them, in my opinion, a marketing or PR firm. But because they don't have a cannabis license or permit, they're really having a difficult time right now getting workers' comp, general liability, product liability, and so forth. So what they're really having to do, and kind of piggybacking on what Jason mentioned, is they really need to make sure their contractual agreements with their manufacturers are up to par, and not just for picking up the tab on, let's say there's a product liability claim, but picking up the tab on defense, because a lot of the time, even if they're listed as additional insured on the product liability of the manufacturer, that doesn't mean that the manufacturer is going to pay for their legal fees and expenses. And typically, if a brand's name, is on the shelves, I mean, they're going to be the first one named in a suit. So it's really, really important that they are listed as additional insured on the contractual agreement. They have the insurance on the manufacturer that's primary, meaning that their insurance policy would respond before the brand's insurance would respond, and definitely making sure that there's that clause in there that says that they will also pay for attorney fees. So those are just things that I find to be really, really important. I've had a lot of brands, they feel as if they're at the mercy of the manufacturer, and I really feel like that's not necessarily, they shouldn't have that thinking pattern, because at the end of the day, if they're really good at getting people excited about something, it's an equal partnership. And some of them get really nervous to ask for an addendum with some of the recommendations that I've made. So I really think that there's an area where the brands tend to feel a little bit vulnerable in that area. And they just feel like they're at the mercy of the manufacturer because they carry the license, and I understand that. But at the end of the day, I really do think that if they can come up with a mutually beneficial agreement where one's really pushing and promoting and getting people excited about something, and then they're facilitating the product and they're also doing the distribution, I think they should definitely work on brushing up their contracts. So that's an issue I'm definitely noticing. And the other topic that I just wanted to go over was product liability recalls and who is responsible. And let's say you get looped into one of those. It's definitely important to, first of all, again, we're all talking here about contractual agreements, but making sure that those are up to the snuff. And if they are, then what you can do is tender that claim to either the distributor or the manufacturer, sometimes even the cultivator. And I'm, again, talking about if you're a brand, because you're the first name that's going to be most likely in a claim. For example, like Coca-Cola, let's pretend like they didn't manufacture their own soda, but the name is on here, so this is the first name that's going to be on the claim. So what they would do is definitely tender the claim to all the other parties that could have possibly contaminated the product. The next thing that I feel is really, really important is, and I've had to talk to a few attorneys that weren't quite experienced in this area, that don't settle the claim, don't try to offer a settlement to whoever's filing the lawsuit before you file an insurance claim. Because the second you do that, the insurance carrier can immediately deny the claim. So always send it through to the insurance carrier before you decide to settle separately on your own. Those are just some really important key things I wanted to mention.
Tender claims. Tender your claims
Absolutely.
right away.
Absolutely.
Have you guys actually seen people not tender their claims when they could have?
Oh, I
I
mean,
don't understand why.
not only in this industry.
Yeah.
I mean,
They get really
yeah,
nervous.
it's-
Yeah.
But I mean, but a lot of the claims in this industry are going to be made under claims made policies, which means if you don't make the claim in time, you have no coverage.
Exactly. And it's really scary too, because I mean, going back to the banking issue, a lot of them, if they have an ACH payment plan for their product liability claims made policy, if they lose banking and let's say that there was a lapse in coverage, I mean, essentially it goes right back to the inception date. They no longer have coverage at all. So it's a very volatile situation in my opinion right now. So, and as far as the tendering, yeah, they either don't understand what it is, they don't know how to do it, or they're nervous to burn a bridge. There's been a few issues in that scenario. Yeah. So.
Excellent.
And that's all we have.
So I have a few questions. First, thank you. Each in various ways. You started with talking about the chain of distribution and the kinds of liabilities that those in the chain might face. Followed by Jason's discussion about how one can, depending on where you are in the distribution chain, shift the risk through contractual mechanisms by seeking indemnification and defense costs, opposing those and others. And then you importantly talked about aspects of challenges faced by brands and the kinds of risks they face in ways that they can try to shift that risk to others. And then collectively, everyone has talked about how it's really critically important to tender your claim right away and go away. So I guess what I'm curious about in hearing that is how prevalent are these, if you will, insurance-related or non-insurance-related mechanisms for shifting risk? How prevalent are they across the cannabis supply chain? I mean, are growers doing this, yes or no? To what extent? Are manufacturers doing it, yes or no? Are distributors doing it? Are labs doing it? Who am I leaving out? Retailers, are they doing it? Or is the take-up pretty low across all sectors of the supply chain, or does it vary? Just out of curiosity.
So what I've noticed is, and I've actually been training a lot of my dispensary clients to ask for proof of product liability insurance from the brands that are, or whoever's distributing the brands and the products on their shelves. And so they're definitely, and I'm hearing it even more at my clients in LA County. They're actually doing a pretty good job. They've been tightening it up a little bit on who's allowed to put the product on the shelf. So they're asking for additional insured, they want their name on the certificate, they're wanting proof of insurance. So I've noticed it quite a bit with my dispensaries and my manufacturers. I have not seen a whole lot of that with the cultivators. Definitely seen it quite a bit with distributors too. But cultivators I've seen it the least, and I think with the labs I've seen it absolutely the least. Yeah.
Jason?
I mean, I think that's consistent with my experience. And, you know, but what I'd say is, I think, you know, even a year ago, you know, I asked a friend who had a vape company to see his supply agreement so that I could sort of see what he's doing, and he said, "What agreement?" You know, and we are, as an industry, moving quickly from that point to a point of a high degree of professionalization, not only around, you know, the way in which we're being regulated, but also in the way in which we're contracting with one another. And so right now, I think it's consistent to say, cultivators aren't doing this, labs surprisingly aren't doing this.
No, right.
It's sort of like, if you can't spot the sucker at the table and, in the first 5 minutes, you're the sucker, you're the one who is going to have the risk shifted on you. And if you're a cultivator out there, by the way, you're the one with the least leverage, there's no question. But that doesn't mean that you don't have to pay attention to this stuff. You do have some leverage in conversations, and you have to know what you're agreeing to. I've dealt with folks who, even in dealing with their own leases, are agreeing to things that there's simply not coverage available to comply with. And so you need to know what you're agreeing to, you need to know what risks you're taking on, so that you can manage those risks appropriately. And if you don't, you're going to be in breach of contract. These are material terms, to the companies you're dealing with. They're dealing with, in agreeing to work with you, what is going to happen if there's liability here. And that's a material term of a contract. So if you don't buy the insurance coverage that you've said you're going to buy, you're in breach of contract. And no matter what else happens, you are not going to be able to recover from them if they breach their contract. So, everyone needs to take this stuff really seriously.
Has there been any or much litigation around these contractual terms? And how are courts, if any of this has gotten to court yet, how are courts responding to these contractual terms?
In this industry, I don't think the litigation is, I think it's a little early. Yeah, I mean, we are fortunately at the stage where there's been enough litigation around the question of, is this insurable? And the one court in the published decision has come down and said, yes, if you knowingly come in and insure this industry, we're going to make you stand by your policy.
Right. So that's a insured making a
Right.
claim against an insurer.
Right,
But
but
in
it's
terms
not.
of these risk-shifting mechanisms vis-a-vis indemnification defense costs, I mean, there's a whole body of litigation around these principles in other business areas. I'm just curious whether disputes have emerged that are somehow unique to the cannabis industry around these risk-shifting mechanisms.
Not that I've seen.
I've seen so far on the risk transfer agreements with security guard companies, third-party security guards, on their own workers' comp policy. However, getting injured on a client's location, right, so it's a third-party location, and then not only are they filing workman's comp on their employer's insurance, then what they're doing is now they're also suing the property owner as well as the tenant for the injury. So,
These are security companies that are hired to secure
Correct.
cannabis facilities.
absolutely.
Okay.
Yep, third-party security hire, and basically, they will then go out and sue the business owner or the property owner for the injuries as well. So they're basically going in both angles.
Even though they're ostensibly independent contractors, are the individual guards independent contractors, or are they employees of an independent contractor that's contracting for the cannabis business?
That was it right there,
Okay.
second one,
Yeah,
yep.
second,
yeah.
And so what I'm telling my clients to do is to get a waiver of subrogation on the workman's comp for the security guard companies. So basically just, that will help with some of this. Basically, it won't help with them doing a direct lawsuit individually on their own, but at least what it's doing is it's cutting out the ability for the insurance company that received the claim to subrogate with the insurance company, like with basically the property owner or the tenant's workman's comp. Because basically what a waiver of subrogation is they're subrogating their rights to get the funding back. I mean, basically they're trying to make up for the cost of the claim. I can't really quite explain it. You know what I'm saying, right?
Yeah, no, I mean, so at a broad level,
Right.
waiving subrogation among contracting parties is going to essentially limit recovery to insurance coverage. And that's going to be fine. It's going to prevent an insurer who pays out on a risk from coming after other parties who are going to be responsible for that risk. So again, everybody's responsible, and lots of different people are going to get sued. One insurer potentially is going to pay out all of that, and then absent a waiver of subrogation, you're going to see an insurer go after the other responsible parties. I agree. It's a great term to have in your contract. It's part of the transferring risk. You want to make sure you get buy-in from the carrier and you get that provision baked into your policy. You really have to wed your contracts to your insurance policy. That's not, by the way, in this industry alone. That's in any industry.
Absolutely.
And I will say, with the security guards that you raised a point in my head. In terms of what you're requiring, it's not only other cannabis operators that you need to be paying attention to these contractual provisions with. Security guards are going to be operating on your premises. They are going to be operating in a cannabis facility. What does that mean? That means their standard insurance policy is not going to cover them. And so if you are a company that's contracting with a security company and requiring that they carry insurance, you've got to make sure that that insurance is cannabis specific.
Yep.
And there are options out there. They are very limited, even more so than expensive.
Yep.
But if you are hiring these folks, you need to insist on it, because otherwise you are going to be responsible for these things. And the security guards, by the way, can get coverage that you likely can't. It's very hard to get assault and battery coverage. What is assault and battery coverage? If a security guard tackles somebody trying to get out of the store with a bunch of your product, and they break a leg and sue you, that you need assault and battery coverage to cover that. You can't get it. I mean, it's not literally true, but it's virtually true that you can't get it. You said that 5 minutes ago.
So before we go to the audience, on this point of, so a lot of the conversation in the panel was shifting risk within entities in the cannabis supply chain, but the point you're making now, both of you, is that there are risks associated with third-party vendors or suppliers to a cannabis business, and that those third-party vendors or suppliers themselves would typically have insurance, and any other business interacting with them would require that they have insurance. Show us your insurance. Problem is that that insurance is typically cabined by some sort of provision that says that the insurance only pays out as long as there's compliance with law, and since it's federally unlawful, that insurance company for that third-party vendor or service provider can say, well, look, I don't have to pay out because you're involved in the cannabis industry, providing good service to that. So does your point about security guards then apply to any third-party vendor or supplier in the cannabis industry? Yes?
Absolutely, though I would say security guards are in a unique position in that they are coming in and operating.
So it's more acute because they're on your property.
Right, they're operating in your property.
And they're doing some things that themselves may raise additional
Right.
risk, like tackling your customers.
And
so hopefully not important. Let me see if there's any questions from the audience for our distinguished panel. Yes.
As far as vehicles go for transporting, whether you're a distribution company doing your own, or if you're an independent transportation company, would those vehicles and those drivers be insured through through you guys, or is that through auto insurance? Are they doing special stipulations for those kinds of things?
So you're asking, so basically the insurance for the vehicles that are distributing product?
Yeah, for the vehicles and for the drivers.
So the vehicles and the drivers would need to be, first of all, the registration would need to match the named insured of the vehicles. And then you would want the drivers and the vehicles to be insured under the distribution company. And then you would want to do, what you'd also want to do is get a cargo policy in place that would cover cannabis and or cash while transporting in the vehicle. But that would all go under the distribution company if that if the distributor is the one, right, of course, driving the vehicles around and so forth, the insurance would need to follow that company. Does that make sense, or does that answer your question?
Yeah, then how different would that be for a delivery service?
Like a non-storefront retailer.
Well, you have two types of vehicles, right? You have owned and non-owned, right? I think it's the question that he's kind of asking.
Right, oh, okay, well, so hired and non-owned, you cannot have hired and non-owned auto, for, basically, if you're doing delivery, you would actually need a commercial auto policy, and then you would do a cargo policy on top of it, because the commercial auto will not cover the cannabis and or cash that you're delivering. It would just cover the liability of the vehicle if they were to injure or hurt somebody while on the job, while driving, for the delivery, let's say the mobile dispensary, for example. But typically you cannot get hired and non-owned auto if the actual job or majority of the work is delivering on the road. So you would want to get a commercial auto policy, and then if you wanted the goods in transit coverage, you would do a cargo policy.
So with Mike's permission, we'll take one more question. Yeah, please.
Do personal umbrella policies fit into this at all?
Personal umbrella? Yeah,
You do excess or you would do like an excess policy or a commercial umbrella. Not personal umbrella. Like personal umbrella would be like the umbrella that goes under your home, your auto, and all of that. And then if you max out those limits, then the umbrella comes in. There's the same type of or similar structure in the commercial world. So what I typically do with some of my clients, I'll add on like an additional $1 million or $2 million in excess liability. You can sometimes, depending on what the carrier is, you can go up to like $5 million or and so forth. So you can definitely do that, but it would have to be under a commercial insurance form.
Well, I would say that if personal umbrella is coming into play, the company's done, right? I mean,
Absolutely.
Every other asset.
Exactly.
Now they're coming after you.
Exactly.
Yeah. So hopefully you've structured things where you personally are not. You've got a corporation, or address in the Cayman Islands. Like the Cayman Islands reference. So we'll take one more. Mike's pointing back there.
Yeah, hi, I'm in the back, I'll stand up. I just wanted to ask if you guys see these indemnification contracts kind of becoming the trend and the norm, and then essentially they're just shifting risk down the supply chain, would it stand to reason that maybe a few years from now, the cultivators, since they have the least amount of leverage, might end up bearing the brunt of this entire trend? And if so, should we be advising our cultivation clients that, get ready for additional expenses down the line?
Great question.
I mean, it is a good question. I think, again, you want to make sure that you're insured for these liabilities. I think that you want to be thoughtful I do see it as a trend. I do think that, there is no question that the way the industry is heading is, professionalized contracting, and this is going to be a major piece of that. I think a lot of interesting things could happen over the years. I think at this point everything, it's sort of make sure your house is tended, and then over time, the way that the industry is going to manage its insurance coverage is going to, and risk management is going to come clear. I don't think we're there yet as far as being able to see with the crystal ball what it's going to look like.
All the audience's questions were great. Thank you very, very much. And so I think we're going to move to our next panel now. Thank you. How about a round of applause for So our next panel is going to be focusing specifically on special kinds of risks that the industry might face, and I think some of the specialty insurances that are available. Come on up. We're delighted to have join us for this panel Stephen Ricci, Angela Hochberger, and Dean Rocco, and I'm going to ask them to each introduce themselves and where they're from in turn, and then we'll launch right in. Welcome.
Angela, you want to introduce yourself?
Sure. My name is Angela Hochberger. I'm an insurance agent at Bolton Insurance Company. We have offices in Los Angeles, near Pasadena, and Orange County in Anaheim.
Great. Stephen Ritchie, broker at Owen Dunn Insurance, Sacramento. One office in LA. Just happy to be here.
And my name is Dean Rocco. I'm a partner here at Wilson Elser, and along with Ian, I'm co-chair of our National Cannabis Practice Group. So thank you all for being here and welcome.
So I think there's an order that I have, which is Stephen, Angela, Dean. Is that?
Yeah, well, let
Is that what we
Steve kick
agreed to?
off the discussion.
All right, good.
Yeah. All right. So once again, thank you everybody for being here. I want to start by briefly discussing the how and why specialty insurance products are about in the marketplace. And some of the examples of these coverages, EPLI, cyber, directors and officers, which Angela will touch on, mergers and acquisitions, pollution, just to name a few. There's quite a few out there, constantly evolving. So specialty insurance is kind of exactly what it sounds like. Being a retail broker myself, rely heavily on wholesalers and carriers really for their knowledge. I mean, it's a niche within a niche. It's not something that you get your insurance license and then you start selling D&O the next day. Definitely not something you want to cut your teeth with. And unlike standard coverages, I mean, the underwriting is really equal parts art and science. Some of these are manuscripted to exactly what they're covering at the moment. Nothing like the CGL. Most of these developed kind of out of necessity. I mean, general liability, there's nothing really general about it. Throughout the years, it's been revised, there's exclusions added. It's really become a fairly specific form, especially in the cannabis industry. And so companies are sort of forced to go out and find other coverages. Carriers are forced to develop these new policies. And then the world is just changing. I mean, 30 years ago, you didn't need cyber insurance. And it's something that is really still changing day by day as far as risks go. And sometimes businesses are just covered better and more thoroughly in our own separate policy. So that's kind of how it came about. I'll just touch on a few of these. Like I said, cyber, 30 years ago, nobody really needed it. Nowadays, it'd be difficult for me to tell you that you didn't have some sort of exposure with cyber liability. Think about data destruction, theft of your data, denial of service attacks. You lose some sort of profit from people locking down your website. Extortion comes to mind. People actually send you a bot, encrypt your data. You then have to pay them to get decrypted. And then everybody's probably experienced it from one form or another. And that's that liability where the big box retailers lose your credit card numbers. It's out there on the dark web. Equifax lost 150, 200 million records of everything about people. That kind of leads into EPLI too, as far as the landscape of how the industry is going and kind of the state of California and state of the world. That is going to be in place to protect the company from employee claims, sexual harassment, discrimination, wrongful termination, breach of contract, and wage and hour. So any sort of meal break, rest periods, think of overtime calculations, very popular in the construction world. Tough coverage to get to because there's a lot of claims out there for that. Mergers and acquisitions, another specialty risk, really more of an art than a science. These types of policies are crafted almost to follow the contract of the buyer and the seller. It'll indemnify each party. If there's any sort of misrepresentation down the line. Aside from the actual insurance asset themselves, can help that the sale close faster, just from the fact that there is that asset knowing that's out there to be drawn down upon. If something happens, not even at the time of sale, it could be 7 years down the line, but it's ever written into the contract. There's kidnap and ransom, that's a fun topic. It's a different type of policy with the fact that the insurance company isn't really paying for the ransom itself. It's a reimbursement type policy. I'm going to say if this might be available at the time in the cannabis industry, because these things are sort of touch and go. But going down to the bank and somebody knows what you're doing, and then you're then forced to withdraw your whole bank account and give it to the person. It'll protect against that too. Aside from that, I think Angela's gonna take away with kind of the commercial general liability, sort of what it is and isn't.
Sure. So before we go into some of the specialty lines, it's kind of good to touch again a little bit on what commercial general liability is and what it's not, and some of the forms that we see and what's covered on this policy. So it's a commercial general liability policy is a standard insurance policy that business owners will get to protect them for liabilities against property damage, bodily injury due to your premises, operations, products, and completed operations, or also for your personal and advertising injury. What it is not, though, it does not cover employee injury, so it does not cover workers' compensation. You know, you have to get a separate policy for this. It is not, as the gentleman said back there, auto insurance. That would be an auto liability policy. It is not for professional liability. That will cover errors and omissions. It is not for employee liability issues that might come up, like wrongful termination, harassment. And it is not a pollution policy. It's not a cyber policy. It's not a lot of things. So there are two forms that a general liability policy can be written on, and these are really important as they touched on contracts earlier. You have to be really careful of the contracts that you're signing, because as an insurance agent, we're getting contracts that have already been signed and they're expecting us to just meet the insurance requirements, and this happens all the time. And sometimes we can't meet those requirements because the coverages don't exist, or sometimes you may have a policy in place that's on a claims made form, and you have a contract with a landlord who says that you have to be on an occurrence form. So if this is the case, you're now in a breach of a contract. So what is the difference? A claims made form is going to be a policy that's triggered when the claim is actually made during the policy period, regardless of when the wrongful act occurred. And this is important because if that policy ends or is terminated, the coverage no longer exists. So you have to then buy a tail coverage or an extending reporting period for the coverage to exist. And unless there's a retroactive date, that's the only exception. And also a claims made policy can be less expensive the first year, and then will gradually increase to it matures during the 5th year. So we have to pay attention to this as well and make sure that your clients are aware of this. An occurrence policy is a policy that's going to cover you regardless of, it's going to cover you during the actual occurrence of the policy. So if it's a claim that happened during the effective period of the policy, it's going to cover it no matter when you file the claim. So if the policy ends and you file the claim, it's still going to have the coverage there. Most of the contracts that I'm seeing are requiring occurrence, so you have to make sure that you have the right policy in place. Another thing that we talked about with the contracts are events and vendors. Are they covered under your commercial general liability policy? So if you have a commercial general liability policy and it has a designated premises form on it, which many of the cannabis policies do, that means that you have to have every single location scheduled or it will not have coverage. So if you go and acquire a new location, until you schedule it on the policy, it's potentially not covered. If you go out to an event, these branding companies or other companies, if you're working at a convention, if you go to a festival, if you do not have this designated premises removed, you do not have any coverage. Therefore, there's a solution to this. You can either have it endorsed to add the special event coverage, or you can buy a special event policy, which they do have available in the cannabis space. So that's an important thing to note as well. That doesn't always follow you no matter where you go. Also, the vendors are not automatically covered. So a lot of the contracts will require that you name them as an additional insured. This is not automatic language. These are things that have to be endorsed onto the policy individually, unless you have a blanket coverage. And not a lot of the cannabis policies right now have blanket coverage, which would say that it's required as required by contract. So maybe push for the blanket coverage, or make sure that you specifically endorse every vendor onto your policy so that you can issue a certificate of insurance and an endorsement that states that the policy does extend to them to give them the additional insured coverage. So one of the other specialty lines that we talked about, that we will talk about, is professional liability. This is not covered under your general liability policy. And what a professional liability policy is states that basically this is going to cover you for your liability if you are a specialist or an expert in your field and you can cause financial harm to someone else based on your mistake. So you have to think, of course, of physicians. This would be like the most common form of a professional liability policy. Lawyers have errors and omission policies to cover them. But also in the cannabis space, manufacturers are one that we may not think about. They have a professional liability exposure as well. Because if you have a client that's waiting on a product for you to make for them, and you make a mistake in manufacturing this product, and now you're not able to give them what they need, you can cause them financial damage, and you have a professional liability exposure because of your mistake. Also, lab testers have a professional liability exposure. So Turning away from general liability, I want to go ahead and introduce you to Dean. He's going to cover and walk through employment law risk and EPLI.
Thanks. So to nerd out a little bit on employment law, which is what I did before I became the guy that talks about weed at all the dinner parties. The first place to really start in this is to recognize that employment practices liability coverages or employment law risks are risks between employers and employees. California's law has changed in a very material way this year in terms of what a independent contractor is and is not. And it went from a multi-factor test that good lawyers like myself could sort of mold into situations and make a lot of people look really like independent contractors. It's now a 3-factor test, and there's not a lot of wiggle room, and there's not a lot of law in the area. It's very employee-friendly, and so it should force many employers, including those in the cannabis industry, to take a conservative approach. Those 3 factors are the following. First, like any other independent contractor test before it, the individual that's doing the work at your facility has to exhibit some independent discretion and control over how they do their work. So if you're standing over them or giving them instructions on how to do things, if they're a trimmer and you tell them, I want you to stand here for 8 hours and trim buds in a specific way, that's not somebody who's exhibiting independent discretion or control. They're not acting like an independent contractor. Secondly, they need to be performing work that's outside the usual course and scope of what it is you do as a business. So if you are a dispensary and you're selling products, putting somebody behind the counter to sell products is what you do. You can't have an independent contractor selling products at a dispensary. It's not possible. But if you want to bring somebody in to build cases or to do some construction work or clean the facilities, those are things that are not the core of your business, and you can have independent contractors doing that sort of thing. And finally, the person that you bring in must maintain an independent business or operation or trade outside of what they do for you. So even if somebody meets the first 2 factors, but they're employed by you 365 days a year and they don't have any other clients, they're not an independent contractor. And those are really the 3 sort of factors that meet in there. Anybody who doesn't meet those factors or otherwise is an employee of yours is somebody that can sue you, to put it sort of bluntly from a defense lawyer's perspective. And there's a number of things that they can sue you for. Steve mentioned before some of the wage and hour issues. We're not going to touch upon them a lot because by and large they're not insurable. Most insurance companies have gotten punched in the face enough with wage and hour claims. They're very expensive, and they will write them out of every policy that you buy, whether you're in cannabis or other industries. There's some very specific policies that might cover it, but most of them are not going to be covered. But it's a risk, and if you don't want to get sued for misclassifying your workers, hit with overtime claims, and not have any records to disprove them, move people that are misclassified into employee relationships so you can get some of those records. Beyond that, there's the discrimination claims. We'll talk about those more in a little bit. And really one of the areas that we're going to see a lot of law developing sooner than maybe other areas in cannabis is going to be workers' comp. So any of those workers that are working for you, whether you call them a duck or treat them like a duck, it doesn't matter. If a court determines that they're an employee, they're needing to be covered by a workers' comp policy. And if they get injured doing their work, that's something that you need to have an insurance policy available to compensate them, or else face certain death. And I'll turn it over to Steve to talk a little bit more about what workers' comp insurance is and what it does. But before I do that, I'll just give you an anecdotal story that this is maybe 3 weeks old. I got a call and a referral from someone, and it was a guy running a dispensary, and he didn't have workers' comp. He brought in a guy off the street to be a security guard. The guy was being paid off the books, and he fell and he cracked his neck and he broke his neck. The guy is close to paraplegic. He has no workers' comp insurance to cover the guy, and there is a backup fund that is available, but it won't be able to cover it. And that fund will no doubt come and try to seek subrogation from that business owner by saying, you should have had this insurance in the first place, and we just paid a lot of money out. We're now coming after you. And in a thinly organized business like that, that's not insured in the right way, that guy, they're going straight to that guy's personal assets. And there's not much that a lawyer can do, even a really good one, that you call. So it's a real thing, and it is happening in the cannabis industry. And so I would urge folks not to assume that the people you're doing business with have this, and ensure the people that you're doing business with do have it. So maybe you can talk, Steve, just a little bit about what workers' comp is and what it covers.
Definitely. I mean, like Dean said, workers' comp, what it really is it's statutory. I think the state fine is $1,000 per person per day, up to $100,000 if you're caught operating without it. Not to mention, there's a potential fine if you're willfully operating, and criminal punishment for the business owner themselves. Not to mention you're paying those medical bills and some of that indemnity for that injured employee. If it's a severe injury, I mean, you're not operating anymore after that. I mean, that's millions of dollars that you don't have to cover a claim like that, and you're never going to survive something like that. So really what workers' comp is it's a no-fault type of coverage for your employees who suffer any sort of injury or illness in the course of their employment. And what that no-fault means is there doesn't necessarily need to be negligence for it to respond. It doesn't matter if that employee has been told 100 times that way. Being that it's no fault also is kind of allows the employer to at least understand that they're paying for this insurance asset, knowing that they can't be sued for punitive damages down the line. It's the sole remedy for that employee to seek any sort of coverage for the most part. And I've had questions like, what if that when an employee just got injured, they get drug tested, they're found to be under the influence? That's not always excludable. Really, it needs to be found that that substance caused the injury. There's a sole reason why that injury happened. Just because the guy had a couple beers at lunch and came back and cut a finger off, doesn't necessarily mean that you're not going to pay for that claim. You do have, as the employer and the carrier, 90 days to investigate those claims once that injury, you're made aware of the injury. If you don't investigate it, you own that claim, you're going to be paying for it. Think about, the fact that it really is, it's kind of, I really love workers' comp. It's kind of how I started, and it really is a great asset for each side. Employers are afraid of having employees use it. They think it's a dirty word, and it's one of those claims that they don't like to have go down. But there's definitely many ways to manage those claims and really benefit both sides. So, and I think there's some laws that sort of developed to help the cannabis industry. Angela?
Sure. So the WCRB is California's trusted objective actuary-based entity that classifies all employees in the state of California and kind of tells you how to rate people who work for you into different categories. Different categories have different rates. So the WCRB has come up with some codes that are important for the cannabis clients, and I'll go over those with you because I don't want to bore everyone, but it's important because if they are classifying their employees at a rate that's really expensive incorrectly, they could be paying a premium that's really high that they don't need to be paying. And if on the other side of it is if they're putting all their employees on a low-rated place, they need to know that they're subject to audit and that they could get hit with a huge audit at the end of it all. So you have to be really careful on how this is done. So this is a little dry, but it's coming straight from the WCIRB, and all I can do is just kind of read it out to you guys. So classification 0035 is cannabis cultivation, and this includes trimming to prepare buds for sale. 4611 would be the drug, medicine, or pharmaceutical preparations. So if you're a trimming specialist, packaging for individual sale, compounding, blending, or packaging, production of extracts, concentrates, hash oils, vaporizing, this is going to go under that class code. 2003 is bakeries and cracker manufacturing, and this is going to be baked goods such as cookies or brownies with cannabis infused. 2163 is bottling beverages. This is a manufacturer of cannabis infused beverages. And then you have 8017, and this is a big one because a lot of people fit under this, and it's called retail stores, but they've broadened this retail store classification to include more than just your regular retail store. So I'm going to read this one to you guys as well. It says marijuana dispensaries. Retail outlets may also perform packaging of individual orders, final trimming, cigarette rolling, and similar operations to prepare the product for retail sale. Many marijuana retailers sell a minor amount of marijuana plants or clones in addition to marijuana and cannabis-infused products. Also, this applies to marijuana delivery sales companies that may not operate as a walk-in retail store. So Dean, beyond covering risk of employees being injured, what are the risks employee presence that might be mitigated through insurance?
So that's where the Me Too movement starts to move into this, which is the big lawsuit du jour in employment law these days. And EPL is a specific specialty risk that you can purchase for your, wave to the guys who are taking selfies in the back, hi Mike. It's a specialty product that you can get for your business, and it will insure you against the loss and provide you some defense costs to defend against discrimination, harassment, and wrongful termination claims. I will tell you that if you do not have this insurance and you want to do the math, to defend one of those claims through trial is going to be north of probably $150,000 on a simple case, and more if you have a lawyer on the other side that likes to serve discovery and litigate it very hard. And the damages in those sort of cases are lost wages, usually in a range of 1 to 5 years, emotional distress damages, and potentially punitive damages. So it's not unusual for somebody who's making minimum wage to have well into 6-figure damages plus your attorney's fees. So if you're running a clean shop and you feel comfortable that your workers are happy and nobody's going to sue you, maybe you don't buy EPL. But even in those environments, I've seen the claims. If you're running things in a different sort of environment and your employees are not happy and they're prone to suing you, the premiums for an EPL policy are probably going to be far less than the several hundreds of thousands of dollars you'll be coming out of pocket for to defend those sort of things. And these risks are not unique or they are not outside of the cannabis industry. The days of everybody's friends and buddies working for them and family members working for them are gone. The industry is recruiting from industries outside of cannabis.
Directors and officers coverage is separate from employment liability coverage. It's going to actually cover the directors, the officers of your company, the board members, and their spouses from their personal assets regarding wrongful acts committed and managing of the business. And this is the coverage that I find carriers right now are the most apprehensive about because of all the regulatory environment in the cannabis industry. The carriers are very apprehensive about this coverage, and they're not giving it away. So I try to tell my clients that a lot of them don't understand why do they need to show me their business plan, their pro formas, their financials, because the better that you can tell the story of what's going on, the better I can sell this coverage to the carrier and make them feel better about your stability as a business and what you're doing. And so it's important, especially if you're separated from the farming or the dispensary area, there's been a significant reduction in premium that can be got if you're not part of that. So you really want to be able to explain your story so they get a better understanding of it. And these policies are being written with a lot of exclusions, so you have to be really careful of some of the carve-outs that are being done, especially regarding the regulatory coverage. You want to address bankruptcy concerns. There's a coverage, it's called Side A coverage, and this is a gap kind of insurance that you can sell to the directors and officers in case they're not indemnified by the company to kind of protect them from their personal assets as well. And then also, subsidiary language is important. A lot of standard D&O policies will have subsidiary language, but in the cannabis space, we're finding that it doesn't include that. So if you are, a lot of these companies are acquiring and merging with others, and if you do that and you do not schedule the new named insured underneath that D&O policy, it's not going to have automatic coverage. So be really careful about that. And also, we're seeing a lot of the D&O and EPLI policies written together with a shared limit. And so I always try to push to get rid of the shared limit. Yes, it's going to be more cost effective if you have a shared limit, but is that really what you want? Because basically what it states is if you have EPLI coverage and D&O coverage under one policy and you have $1 million limit, and say you have a claim, an employment liability claim that's $700,000, that only leaves you with $300,000 for your D&O and your employment liability exposures for the remainder of the year. So it's important to try to get those limits separated if possible, or at least make sure that you make your customer very aware of what they're buying.
And in this industry right now, with a lot of the private placements that are going on, the investments, the boards that are being formed, for those of you that are operators, if you've got a legitimate board member coming on board, they're going to insist that you have D&O coverage, or they're not going to sit in your board.
So you mentioned some of the limitations that operators finding D&O coverage, and I keep hearing that key person coverage in particular is very difficult to find. Is that still the case, Angela?
It is the case. The markets are starting to open up a little bit more, but it's difficult, and it really goes on the story that you can tell. That story can be very vital, and some of these investors don't want to give away their financials and their business plans, and you have to, we're signing a lot of non-disclosure statements. It's important to let them know that what they're insuring, actually, they have to understand what this is. We have to help the industry kind of respond to this, and the best way we can do that is by getting this information. So they're starting to respond, but it's not at a cheap premium.
And then with regard to the other kinds of coverages that cover the specialty risks that each of you has talked about, and I guess work comp is not really a specialty risk, I suppose, but we were talking about that too. But are there any of these sorts of coverages that we've talked about on the panel, in addition to D&O and key person, that are more difficult for cannabis operators to find versus others? Are there particular coverage? I guess asked another way, are there particular coverage gaps with regard to these risks?
Yeah, I mean, professional liability is one that's also a little bit difficult, and the girl on the panel, the lady on the panel earlier had mentioned about the branding companies, and I've had one of those recently. It can be really tricky when you submit your submission to these carriers, if they're not touching the cannabis product at all, but they're just a branding company, and you can get this story out right off the bat, there's a much better opportunity for them to cover them for their professional liability exposures. So it's really, again, all about how you present this and how you put the submission together. The professional liability is starting to respond a little bit more, but slowly.
The other ones. What about the specialty risks you talked about?
Well, really with the D&O and EPLI that we've touched on, that's one that I found it's almost month to month as far as which carriers are dipping their toe in the water, writing a policy. It may not be there next year when you go to renew it. Something we found a lot. Never priced out kidnap and ransom. I've asked a couple people and I get an awesome chuckle out of it.
Who wants to be the first?
Yeah, that'd be awesome. That'd be great.
Talk to him.
And so yeah, it's really one of those. It's just not settled, and it's tough.
Charles will do it.
Getting these operators really to show us everything too, to really make carriers feel comfortable with the risk themselves. So.
Indeed. To coverage availability?
No, I know we have a lot of IP and cyber concerns, but my sense is, even though that's outside my bailiwick, is that market's improving.
Classic case, the roofer, the roofing contractor who decides to denominate all of his or her employees as, desk jockeys, right, as opposed to being up on a roof. And so we investigate those crimes, and then we have powers of arrest, full powers of investigation, and then we work with the DAs to prosecute those crimes. And I distribute about $30 million a year to the DAs to prosecute work comp crimes in specific, not just employer ones. We also go after claimants who are intentionally trying to defraud the system, and providers to the system. Think this knucklehead Michael Drobot that owned a big hospital down in Long Beach and came up with this scheme of kickbacks to physicians to send him more patients to do back surgeries under the work comp system at his hospital. He was also implanting really crappy, shoddy spinal implant hardware in the backs of people, but that's a different subject. Anyways, we investigate all that. So, I think the takeaway is just you need to be very careful and exacting and honest about how you're handling your work comp risk and how you're classifying employees. Let me see if you've got, now I've scared everybody, let me see if you've got any questions from the audience. For our panel.
Can I add to that?
Yeah, please.
If you don't mind.
Yeah, go ahead.
One thing nice about workers' comp, I guess, as opposed to some other coverages, some general liability policies will give back at the end of the year. I mean, workers' comp is one of those that if you use it, you pay for it. If you over-report your payroll and you get out at the end of the year, it comes back to you. So don't be afraid. I mean, we really want to get you as close as you can to your exact payrolls. If you overshoot it, you're going to have that audit at the end of the year. It does you no good to underreport because you get the whole year at least to pay that premium, however well that makes you feel. But you get audited, you get 30 days, 60 days to pay that all back. So you're not going to help yourself out by underreporting. and then you over-report and you don't hit those numbers, you'll get that premium back. Unlike if you miss, your receipts for the year, you just gave the insurance carrier a little bonus. So that's one thing to think about too.
Great. Yeah.
I have a question on work comp fraud in this industry, since there are so many cameras. Like every square inch of these facilities have cameras, right? So do you expect for fraudulent claims to go down because of that?
Well, yeah,
Is it still too early to tell?
No, I mean, there's fraudulent claims wherever. I mean, really, catching somebody on camera doing something, I think it would still be tough to prove whether it's fraud or not, especially in a no-fault type system. I mean, you could be the biggest knucklehead out there, and you could get hurt, and it's going to respond. I mean, I think the best thing you can do, like I said, some employers don't like to mention the workers' comp word if somebody's going to create a claim, is that educate your employees. I forgot to touch on this, that it includes wage replacement. It's not a way to get rich. I mean, it's going to get that employee by. I mean, it should be your whole goal to get them back to work. It's not a scheme for people to get rich off of. And if you're strong as an employer with those safeguards, as far as investigating those claims, you can limit those types of fraudulent activities.
I mean, it's interesting. I mean, we do see some individuals who suffer injuries outside the workplace, who don't have, health insurance, which by law they're supposed to have. And so they bring their claim into the workplace and allege the injury occurred in the workplace. So I suppose, maybe, given the ubiquity of cameras in certain cannabis businesses, it might be useful in suppressing some of that, but my guess is that will be kind of at the margin. Great question. Other question? Yeah.
I'm curious about the scope of and the need for pollution coverage.
Oh, we did talk about that. That was one
Yeah.
listed.
We did, right.
Pollution coverage is something that we're starting to find coverage for as well now, and it is definitely an exposure that definitely all manufacturers have a risk of, in some other entities in the cannabis space as well. But we are definitely starting to find markets that are now offering pollution coverage, so it is available.
Yes.
So my focus is employee benefits, and one of the things that I don't hear a whole lot of is discussion about the employer shared responsibility penalties. So large employers are required to offer insurance. If they don't, they're going to have a penalty from the feds. With a merger and acquisition environment and a lot of investor environment, you've got control groups, and I want to make sure that that's part of the discussion that's going on with the CPAs, with the attorneys. It certainly is in our office. That's one of the first assessments we're doing with our clients, and making sure that a small entity isn't necessarily unaware of being a large employer because of the control group and the aggregated rules. So
Yeah, it's a good point. On purpose, I didn't put it on our agenda because I'm not an ERISA lawyer, so I didn't have to pretend.
Well, that's CCIA, so-
but I will say, our ERISA group within our labor and employment team here at Wilson-Elser has worked with an organization to build a MIWA, which now I'm really going to lose everybody in the room, but it's and again, not to go too deep into the weeds, but the employees who are paid benefits in lieu, or paid cash in lieu of benefits, have to have that pay factored into their regular pay. So if they're working overtime, and they're getting this extra little $500 a month, they're being underpaid every 2 weeks, and there's huge overtime liability there.
Others?
Now that labor unions are getting involved, what impact have you seen, if any, that they've had in keeping the employer on the straight and narrow and providing the protections that they need? And what influence will they have on an insurance carrier in terms of what type of insurance should be provided?
I'd be curious for you guys if that's come into your underwriting or sales part of this. I will tell you, being a kid from Michigan whose parents are both public school teachers and from a very strong union, but then everybody else in our town worked for a company and hated unions because of the car industry. I have my mixed feelings about it. I think the jury's still out. I've met some cannabis operators who have gotten into very difficult situations, and they've partnered with their unions and been part of the solution. I've talked to other operators who have had that traditional experience that you sort of hear about in newspapers or anecdotally, where the unions have come forward and not had their employees in mind, and they've had a very negative experience. But I think the unions are doing more organizing, but I think, sort of, if we're using the baseball analogy, I think we're just getting somewhere between first base and second base on them getting all the way into it. I think a lot of operators have labor peace agreements signed or promises to sign them, but nobody's knocked on their door yet. So I think the jury's out on what that experience will be in this industry. But I don't know if that is something that helps insurance or if it's impacted the insurance.
No, I've definitely seen the labor peace agreements and people purposely structuring their business if they stand under that threshold where they don't have to have one. This is really what I've come across. One more question?
Yeah. So you guys mentioned D&O coverage. If I have a third-party, non-plant touching management company, I can just buy a non-cannabis policy, right?
Yes.
And it'll cover me?
I've just sold one recently for one of those branding companies that is not touching cannabis at all, and I had to get my underwriters to think outside of the box and understand that this is just a regular D&O exposure for a marketing branding company that is not touching the cannabis product or have anything to do with it, and was able to get it done that way. That happened.
You're talking like almost like a venture type company that sort of holds multiple licenses?
Your typical two-tier system where you have a management company and a plant touching company that are...
I would make sure that they understood that they're really in the cannabis industry as far as that's concerned. Yeah.
Mr. Jones, has the Department of Insurance had any involvement in the cannabis banking initiatives?
We have, I've personally participated on the Treasurer's task force to try to come up with a banking solution. But beyond that, not so much. I mean, very early on, I looked at whether there might be a possibility to take some of the more arcane life insurance products that are out there now that have kind of quasi-deposit features to them, and see if there was some way that I could approve those in a way that they would be sort of tantamount to banking, and I just couldn't figure out a way to get there. I mean, my theory of the case was banking, federally regulated, big problem because the feds still say cannabis is a controlled substance. Insurance, not federally regulated, a lot more latitude, I think, both on the part of the industry and the regulator to encourage an insurance market. Is there some way I can use, whatever regulatory authority I have and the life products that are out there, and see if there's some way to come up with some instrument that would be sort of like banking, but we just couldn't figure out a way to get there. So I think the short answer is there isn't an insurance solution that I'm aware of there. There was a bill that Mr. Hertzberg had. Did it get to the governor's desk?
It was,
It was to create an internal
appropriations.
payment system, like some of the vendors are offering now to the industry, where it's basically a closed loop system, so that if you're a subscriber to that system, you can transfer funds, but it's not really banking in the sense that it's tied to, the federal funds transfer system and all the other banks and all the credit unions that allow for the transfer of funds from entities that are outside the loop. So I don't know if others want to add, but I think it's still continuing the problem. Last thing I would say is that what I think we saw in Colorado and Washington, and CCIA can chime in here, is that some credit unions and some small community banks for a big price have come into the market to offer banking facilities to cannabis, and as long as they're following the FinCEN guideline and reporting that consistent with FinCEN, the Department of Treasury, so far I don't think the feds have swooped in on them, but any state that's tried to create a special cannabis bank, see Colorado, they set up a credit union, the feds said no, Colorado sued, Colorado lost, I think in the federal district court, maybe even in the court of appeal.
There are a lot of, to his point, credit unions and smaller state banks that are taking the money, and it's not the problem it used to be.
And watch action in Congress after the midterms. I think there could very well be some help there.
That would be great.
It's easier.
Good. Last question.
Are MIWAs legal in California or for California?
Well, I was going to take Dean aside and talk to him about that because
It's not a self-funded. Okay, good.
It's not a
self-funded. It's an associational MIWA.
All right. But But they are,
Believe me, I read that too.
yeah. So self-funded me was our ban.
Yeah.
Fully funded me was there are significant restrictions on them.
It used to be a way to launder money. So people would say, oh, we're gonna have this thing and we'll self-fund it, and you would.
Like all the employers will kick in, but they would not adequately capitalize it, so there wouldn't be enough money to pay the employees' claims.
Yeah.
And 20 years ago, we had a big mess on our hands because there were a bunch of these that were formed, claims weren't paid, many went bankrupt, there were issues of the owner-operators of the MIWAs absconding with funds. It resulted in legislative hearings at the state level and in Congress. It was a big nightmare. So that's why the Federal Department of Labor promulgated a rule that disfavored MIWAs. The new administration, under the new president, has rescinded that rule and issued a Department of Labor rule that favors MIWAs. But we were successful in convincing the Department, I say we, the Department of Insurance was successful in convincing the Department of Labor, with others, that they ought not to, in issuing their new law favoring MIWAs, preempt state laws that regulate or restrict or ban MIWAs. So state law is still operative, regardless of what the President is saying or the Department of Labor is saying. And state law bans outright self-funded MIWAs, allows other MIWAs with restriction, but they are significantly disfavored. So I'm happy to talk to you more about that offline.
No, it's not.
But then there's this other class of things called association health plans, which are also now newly banned in California. They used to be permissible under the old Obama rule, but Senator Hernandez put a bill on the governor's desk, the governor signed, just to ban association health plans entirely. So there's sort of a narrow window here for this sort of thing.
Yep.
Yeah. Okay. Well, thanks to our panel. I think next we're going to hear from Anna Kavapatian, who's the Chief Compliance Officer with Cannabis Distribution, and also Kat Becker, who heads up the Los Angeles regulatory office for cannabis, if I'm not mistaken. Yeah. Okay, good. All right, thanks everybody.
Thank you guys. So, thank you guys again. We've had an amazing day. I mean, a lot of things you guys have learned. Some of the things you knew and some of the things you didn't know. I really want to thank Commissioner Dave Jones for coming down and spending the afternoon, not just a couple of hours, but he's also going to be here at the mixer as well, along with Kat Packer. So please come on out there, meet them. Yeah?
It probably makes sense to have her come in here.
Yes, have her come in here. Yeah. So the person I want to first introduce, is Morgan Moore. Morgan Moore is part of Worldwide Facilities. He is a wholesale broker, and he's going to help you understand a little more about wholesale and what it really means and how it can actually help the brokers that are out there. And we'll go and introduce Morgan Moore. And then cocktails.
You might need cocktails first before
Right.
you listen to me.
Yep.
Hi everybody, my name is Anna Karapetian and I'm the Chief Compliance Officer for Cannabis Distribution. We're a company based out of Sacramento, but we do service the beautiful state of California. I definitely have firsthand knowledge and experience of this whole insurance situation and what it takes to get insurance. I do apologize, my voice is a little raspy today. And I do understand the importance of insurance with respect to all the types of license types in the industry. Today, I have the honor to introduce the czar, I say, of cannabis in the largest market in the state of California. Kat Packer is the Executive Director and General Manager of the Departments of Cannabis Regulation. She did an amazing job creating a stable market in LA and is very, very passionate, does a great job with social equity as well. Ladies and gentlemen, Kat Packer.
So, good afternoon. My name is Kat Packer. I'm the Executive Director of the Department of Cannabis Regulation for the City of Los Angeles. This is a department that was established back in 2017, largely in response to legalization and commercialization at the state level As folks know, Proposition 64, and specifically the way that California has implemented its cannabis policies, local jurisdictions have complete discretion as to whether or not they choose to regulate commercial cannabis activity and cannabis businesses in their jurisdiction. Of those cities have conceptualized or have actually promulgated rules to regulate commercial cannabis activity. So the city of Los Angeles has been really doing a deep dive into what it would take to regulate commercial cannabis activity. Despite the many cannabis businesses that you may have seen while you drive around the city has actually expressly prohibited commercial cannabis activity prior to January 1st of this year. We had a really interesting and complicated framework in the past referred to as limited immunity. So we expressly prohibited all commercial cannabis businesses within the city of Los Angeles, but certain businesses who either had filed paperwork with other city departments or had paid their taxes for a certain period of years, we said we're not going to prosecute you. Not that what you're doing is authorized in any sense, but we are going to essentially immunize you from prosecution. And so it's that framework that really shifted and really necessitated a need for a policy shift at the local level. So here within the city of Los Angeles, the city of 4 million, I was just in Colorado with some folks who are in the room here today, and part of what we've been talking about in the city of Los Angeles is that the population of the city of Los Angeles is the same size as the entire state of Colorado. So when we talk about the scale of which we're having this conversation, that is the scale of which we're having this conversation here in the city of Los Angeles. To regulate and license commercial cannabis activity is no easy feat. For anyone who's participating in the process, and there are many different stakeholders who are either involved in or impacted by various cannabis policies, I deal and communicate on a regular basis with law enforcement, with health officials, with youth advocates, health prevention community, and most of all, this cannabis industry, who for decades has been largely unregulated. And it is my goal within this role as executive director, as general manager, is to bring some sense of stability to this market, for there to be clarity around what the rules and responsibilities of the various stakeholders, government being one of them, and then also to encourage best practices in this industry. And I'm excited about the progress that the city of Los Angeles has made and that the state of California has made. I think that we're really truly leading a global conversation here in terms of the development of cannabis policy and business practices. Part of what I learned when I was in Denver and in Colorado last week is that there's a lot of low-hanging fruit that I think that the city and the state of California are just beginning to dive into in terms of policy development, that we have some lessons that we can learn from Denver and Colorado. Their programs are now 6 years in the making, so we're starting to be able to grasp at some data that's coming out of those jurisdictions. And then there are other policy areas that the city and the state of California are way ahead of Denver and Colorado, who have been having these conversations for 6 years. For example, the state of Colorado and the city of Denver have not contemplated what delivery means. We went to Denver and we're talking to local regulators about delivery, and they asked, what do you mean, business-to-business deliveries? And no, that's distribution. We're talking about, sales to folks' doors, and they said, oh, no, we're not having those conversations. Well, that doesn't mean that delivery isn't happening in the city of Denver and in the state of Colorado. It means that it's not regulated. And so these are some of the policy areas that we're starting to explore. The other area that I think that the industry is very enthusiastic about, when I was a policy advocate before I joined this role, I think I had a little bit more enthusiasm about it. Now that I'm responsible, I have some concern. Is on-site consumption. We're having conversations around what it would mean to have establishments similar to bars and cigar lounges for cannabis. And there are huge policy, public health, public safety implications. So these are not conversations that we want to rush into. These are conversations that I think that we want to be very thoughtful about, but you should know that the City of Los Angeles is working in strong partnership with states and other regulators across the state. I communicate regularly with the lead regulators in Sacramento, San Francisco, and Oakland, and other jurisdictions that are coming on board to try and figure this out. And so that's what we have been busy doing. Currently, the City of Los Angeles has over 166 businesses that have received authorization to engage in commercial cannabis activity. No businesses to date have their licenses just yet. The form of local authorization that our businesses possess today are referred to as temporary approval. This was kind of a stopgap measure to allow our existing medical marijuana dispensaries to continue to operate while we continue to build infrastructure. Los Angeles had a cannabis immaculate conception issue, in that we had all of these medical dispensaries in the city that we were collecting taxes from, but no one knew where the cannabis came from. So we're trying to, we're trying to shore up that supply chain now. And then the third phase of licensing is open to the general public. Again, we have about 160 businesses that have been temporarily approved via phase 1. Our phase 2 of applications ran from August 1st to September 13th. We got about 600 applications in that period, and so our team is very busy trying to review and parse through those applications. But again, the scale of which the City of Los Angeles is going to have this conversation. The only types of commercial cannabis activity that we currently have banned are outdoor and mixed light cultivation. Otherwise, every single license type that the state offers, we also allowed here for locally. We'll note that we don't have any cannabis events here yet, but we just saw that the governor had signed legislation that would allow local jurisdictions to choose where they have cannabis events, so I anticipate that we'll move forward with those licenses as well. But the City of Los Angeles has long been a hotbed for cannabis activity, so I like to try to tell folks that cannabis activity is not new by any means to the City of Los Angeles. Regulating it is, and so we're trying to map out and measure how we do this in a way that is responsible, intentional, that allows for economic development, decrease in crime disparities, and so that's what we have been busy and have been busy focused on. I can tell you that as we shift into this next year, it's now been a year since I've been with the City of Los Angeles in this role, but as we shift into this next year, I heard mentioned while we were in Colorado, we were in Denver, that if you're in the business of cannabis, you're in the compliance business. And I think that that's our motto heading into the next year. I was meeting with a group of other general managers throughout the city and said that if I was going to title my next chapter in this book, it would be called Managing High Expectations. From a number of different from a number of different stakeholders, and so that's part of what we're trying to do. But folks in this business should know that we do have high expectations of this industry. We expect folks to be compliant, to follow the rules, to be good neighbors, to let us know when something is awry. This is an industry that's very innovative. We have these regulations that bump head to head with innovation, and so it's going to require strong communication between ourselves, our office, the city, the state generally in this industry. But again, want to reiterate that we here in the City of Los Angeles, in the state of California, and this California market is well positioned to lead both a local and global conversation in terms of cannabis policy. So it's a joy to be here with you this afternoon. I'll take a few questions if I can. Happy to be here. Thank you.
I have a question. So you say phase 1 is about 100 plus licenses. Phase 2 is about 600 licenses or applications that were done. And then this is a two-part. And then phase 3 is going to have XYZ. When do you anticipate issuing or notifying the first 600, give or take? And then the second or the third phase, final phase, when do you see applications being received? And when do you see that going into place?
Yeah, that's the multi-billion-dollar question. And the truth of the matter is that I don't have information to share at this time as to when folks will be notified, to let folks know who's authorized for phase 2, and even less information about phase 3. And part of the challenge is that this is the first time that the city is doing this. So this is a highly regulated industry. And regulatory programs of this scale do not come into fruition of their own. It takes intentional coordination and leadership in order to make these things happen. And so that is what we are focused on. This department was handed a huge responsibility back in December of 2017. I think we want to contextualize the situation. Back in December of 2017, the city of Los Angeles and the state of California had for the first time passed cannabis regulations. The state of California has gone through 3 sets. Those policies have changed 3 times.
Including their name?
Yeah, including their name. When the Bureau of Cannabis Control was first created back in 2015, when the legislator had passed medical cannabis regulations the first time, they were known as the Bureau of Medical Marijuana Regulation. Bummer, as the acronym. I think that they recognized that they wanted to change that. So now they're the Bureau of Cannabis Control. But all of that to say, we have been very intentionally focused on the infrastructure necessary to build a foundation for a sustainable and prosperous market, balancing a number of different concerns and interests. And of course we're dealing with mostly industry folks or folks who service the industry, and so folks wanted their licenses yesterday. But the truth of the matter is, in order for us to do it responsibly, the foundation in which we build this ship needs to be a little bit more cemented, and so that's what we're focused on. This time last year, the Department of Cannabis Regulation had 1 staff member, me, and that was not fun. And so,
So you were your own PA?
yeah, I was the graphic designer, lead communicator, policy negotiator, and all of that was very fun, but part of what I've learned, and I appreciate that I've had the opportunity to have this perspective, is that institutions are largely the people who make up those institutions and the values that those institutions embody. And so we're trying to be very intentional about creating a team, platform, and agency that is going to be a valuable resource to the many different stakeholders, the enthusiasts and the naysayers, all while dealing with federal, state, and local challenges. So we've got our work cut out for us. Any other questions?
At the retail level, one of the decisions that is crucial is finding a suitable POS system, point of sale system. Is Los Angeles going to weigh in as far as certifying POS systems?
We don't currently anticipate certifying any particular vendor or sets of vendors for a POS system. The state regulations set the floor, and our local regulations have the ability to make more narrow, more strict regulations. We do require all of our businesses who are engaging in retail to have a point of sale system, even for those folks who are engaged in delivery. But we have tried to refrain, particularly in our first 9-10 months, of trying to dictate who folks in the industry need to work with. And I don't anticipate that. Looking at my council, we haven't had any of those requests or conversations, so I don't anticipate us moving in that direction.
I'm curious, Los Angeles is one of the only cities in the state to require products liability coverage. I'm curious what went into that decision-making process and specifically whether you took into account the state of the insurance markets in the cannabis industry.
So what I will say is that our policy development had really been a long time coming. The first iteration of what a regulatory program would look like in the city of Los Angeles really came into fruition by way of voter initiative of Measure M back in March of 2017. Over 80% of the voters voted in support of Measure M, and essentially what it did is gave the city council the full authority to license, regulate, and tax commercial cannabis activity. Following the passage of local Measure M, the city council began to have a series of public hearings where we invited regulators from Oregon, Washington, Colorado, the local jurisdictions in each of those states to kind of identify all of these issues. I think that we had a very comprehensive conversation. The policy development itself was largely led by our council president, Herb Wesson. He also chairs the rules committee, which is where a lot of the policy development has came from. I don't specifically remember any conversations around why product liability was added to our mandate, but I'm sure it was a part of we have, and to my understanding, we have the most comprehensive local regulatory program in the country at this point, with the types of additional requirements beyond what the state has set at their floor. And again, part of it is because we recognize, being the largest market, cannabis is going to impact the city of Los Angeles in ways that it's not going to impact other jurisdictions. I saw a report that came out earlier, I believe it was in June or July, where one of the cannabis industry publications had articulated that the city of Los Angeles was 44% of the state's adult use market. Now, recognizing that probably makes sense right now. Again, most cities and counties still have bans. But again, talking about our even just the scope of retail, we currently have about 160 retail operators throughout the city of Los Angeles. Our soft caps allow for close to 400. So we're 44% of the state's market, and we're really just getting started in this conversation. So I think that we still have a lot to figure out over time.
For the businesses that are currently in the license application process and the spaces associated with it they've rented, do you know, as far as the fire department inspections go, are they doing pre-inspections in addition to later full inspections, or only full inspections, or developing a special new method?
So it really depends on what you have going on at your facility. For example, if there's extraction equipment, there is a process that businesses who are using various extraction processes need to go and have either equipment certified, or they need to register different chemicals that will be on site. Part of what we've tried to do is to, as much as possible, build our workflow into previously existing processes that the city already has. So for the most part, there's no cannabis-specific inspection outside of the Department of Cannabis Regulations inspection for compliance with our rules and regulations. When fire go in there, they're doing the same type of inspection that they do for, someone who is engaged in extraction for laundry detergent. If it's the same type of equipment, if it's the same type of chemicals, the same type of process, the workflow should be the same. One of the things that I know the fire department has on their website right now, and if we don't already, we will soon be linking our website to DWP, to our Department of Water and Power, our Department of Building and Safety, our fire departments, that you can essentially just get routed to exactly what their inspection process looks like. So, for example, if you are building an ice cream shop and it was going to be a retail business, you may not have to do a change of use or a change of occupancy for that building if you're converting an ice cream shop into a dispensary. but you still need to have your business inspected for whatever activities you're going to have there. And so we're working to streamline the process again. We're dealing with agencies that have hundreds of folks we're trying to, for the most part, we have identified exactly who the point of contact is in fire and building and safety. Earlier this summer, back in June and July, we held a number of workshops where we had our Department of Water and Power, our Department of Building and Safety, our fire department, essentially all of the local agencies who are going to be going in and doing inspections of these businesses, gave an overview of what their portion of the inspection will look like. But I was talking to Alex, my legal counsel in the back, that part of what the department is going to be shifting into later this fall, we will be putting on our own compliance trainings for the industry so that folks know exactly what is expected of them when we go in and do these pre-licensing inspections, and all of that information can be found on our website at cannabis.lacity.org.
Something else should be noticed too, you're talking about, the different licenses, and inspections. If you have a pressure vessel in the state of California, it's required to be tagged by an inspection company that's approved by the state of California outside of the city regulations. And insurance companies can actually do that through the equipment breakdown type policies. So either have a fire marshal come out or have an insurance inspector come out, but it is required by the state of California for any pressure vessel. Any other questions?
Yeah, further to the previous question about products liability coverage, I saw an article in the paper a week ago that testing in California has come up 30% are not passing the test. I mean, that's a big public health concern. Is the city doing anything over and above to ensure public safety?
So in terms of testing, not specifically at the moment, part of what we have been actively engaged in a conversation about is that we are not a public health agency, so you won't ever hear me make any cannabis-related health claims. Part of what we're trying to do is work very intentionally with the state's Department of Public Health, and then I also think that there's a huge role for the County Department of Public Health to play as well. Previously, the county's Department of Public Health had anticipated having a cannabis compliance and enforcement unit out of their environmental health division. This is a unit that would operate similar to how public health goes in and does public health inspections of restaurants. Essentially the cannabis side of the conversation, and I think that the county is still working through what it would mean to implement that locally. We are very supportive of welcoming the county and public health entities into our local cannabis economy to make sure that we're either communicating effectively with the public so that we let folks know what various risks look like, but then also to industry folks to make sure that we're engaging in best practices and that there are these checks in the system.
Thank you.
You mentioned soft caps for dispensaries at approximately 400. I'm wondering if there are soft caps on other types of licenses?
Sure, great question. So we have what I consider to be soft caps, and I'll explain what I mean by the soft cap process. The City Council has developed a policy that for storefront retail, cultivation, and volatile manufacturing, there are soft caps per community plan. Again, with the city of 4 million, there are 35 different community plans throughout the city. So we have this, master spreadsheet that tracks each of the different community plans and what the total number of licenses that can be issued for each. Essentially, it's based off of population. So the city council has said for every 10,000 residents, we will allow for 1 retail facility. That's how we're getting close to 400 for a population of 4 million. A particular community plan that had 50,000 residents could see 5 retail locations. Another community plan that had 12 or 120 could see 12. They're called soft caps because once those caps are met in the individual community plans, the department in the city will have deemed that particular community plan to have undue concentration. And once there is a finding of undue concentration, the Department of Cannabis Regulation and our 5-member Cannabis Regulation Commission are unable to process any additional applications unless we get the express go-ahead from City Council. And so that's why they're called soft caps, because there are certain City Council members who have already indicated that they're gonna hold the line. Once they hit undue concentration, not interested in seeing a single additional license be granted. There are other council members who within their district would welcome additional cultivators, et cetera. And so I think that we will see this conversation shift as we hit those caps, as we see in real life and in real practice how council members treat findings of undue concentration.
All right, guys, well, I want to thank you.
All right, thank you so much.